What if we told you that despite what every real estate expert is saying, 2025 might actually be one of the best years to buy a house in the next decade? While everyone is panicking about interest rates and market crashes, smart buyers are quietly positioning themselves to capitalize on opportunities that only come around once every 10 to 15 years. The mainstream media wants you to believe that high interest rates have killed the housing market. Real estate agents are telling people to wait for rates to come down. Financial gurus are predicting massive price drops. But here's what they're not telling you. Welcome to a Financial Legion, where we cut through the noise and reveal what's really happening in the housing market. If you're thinking about buying a house in 2025, the next 10 minutes could save you tens of thousands of dollars and help you avoid the biggest mistakes that 90% of homebuyers are making right now. You're going to discover the shocking truth about why interest rates aren't the enemy everyone thinks they are. We'll reveal the 5 market indicators that tell the real story about housing prices. And by the end, you'll know exactly whether you should buy now, wait, or run away completely from today's market. But first, let us expose the most dangerous lie that's keeping thousands of potential buyers on the sidelines. Have you been told that you should wait for interest rates to drop before buying a house? Here's the truth that could cost you your dream home. Interest rates and home prices move in opposite directions. When rates drop, prices skyrocket as more buyers flood the market. When rates are high, you have less competition and more negotiating power. The question isn't whether you can afford the interest rate. The question is whether you can afford to wait while prices continue climbing and competition intensifies. Let us tell you about Marcus, a software engineer who was house hunting in early 2024. Interest rates had climbed to nearly 7%, and everyone was telling him to wait for rates to come down. Marcus listened to the conventional wisdom. He kept his down payment in a savings account, convinced that waiting 6 months would save him money when rates dropped to 5%. Here's what actually happened. By the time rates dropped slightly to 6.5%, home prices in his area had increased by 12%. The house he was looking at for $450,000 was now listed at $505,000. His monthly payment actually went up by $230, even with the lower interest rate. Plus, he now needed an additional $11,000 for his down payment. Meanwhile, his coworker Sarah bought a similar house during the high-rate period. She locked in her price when competition was lower, then refinanced 8 months later when rates improved. She saved over $40,000 compared to Marcus and built equity while he was waiting. The moral of the story? You marry the house, but you date the interest rate. But there's something even more important than interest rates that determines whether 2025 is a good time to buy. Market psychology and inventory levels tell the real story about housing opportunity. Here are the 5 critical factors that reveal the truth about the 2025 housing market and why it might be the opportunity of the decade. Factor 1. The great inventory correction is finally happening. For the first time since 2019, housing inventory is increasing in most major markets. This means more choices for buyers and less bidding war insanity. In cities like Austin, Phoenix, and Denver, inventory has increased by 30 to 40% compared to 2023 levels. Sellers are finally being forced to price realistically instead of asking for ridiculous premiums. But here's what most buyers don't realize. This inventory increase isn't happening because of a market crash. It's happening because of normalized demand patterns and increased construction completions. This is the sweet spot where buyers have options without the chaos of a collapsing market. Factor 2. The rate lock arbitrage opportunity. Current interest rates, while higher than the emergency lows of 2020 to 2022, are actually close to historical averages. But here's the hidden opportunity. Mortgage rates always fluctuate and they will come down again. When you buy now, you can refinance later and capture the best of both worlds. Today's lower prices with tomorrow's lower rates. But there's a timing element here that creates urgency. If you wait for rates to drop significantly, you'll be competing with everyone else who had the same idea. Factor 3. The demographic wave that nobody talks about. Millennials are entering their peak home buying years and Gen Z is right behind them. This creates sustained demand that won't disappear regardless of interest rate fluctuations. But here's the twist. This same demographic pressure that supports demand also supports prices long-term. Waiting for a major price correction might mean waiting forever in high-demand markets. Factor 4. The construction reality check. New home construction still hasn't caught up to demand in most markets. Supply chain issues, Labor shortages and increased regulations have kept new inventory below historical norms. This supply constraint provides a floor under home prices even in slower markets. Markets might cool, but they're unlikely to crash without a major economic catastrophe. Factor 5, the inflation hedge advantage. Real estate historically performs well during inflationary periods because property values and rents tend to rise with inflation. Your fixed-rate mortgage payment stays the same while everything else gets more expensive. If inflation continues to be a concern, owning real estate with a fixed-rate loan becomes one of the best hedges against currency devaluation. Now let's talk about the elephant in the room. Affordability. Yes, higher interest rates make monthly payments more expensive. But affordability isn't just about the monthly payment. It's about total cost of ownership over time and opportunity cost of not building equity. Here's the math that changes everything. If you're paying $2,000 per month in rent, and a mortgage payment would be $2,500, that $500 difference buys you equity building, tax deductions, and inflation protection. Over 10 years, the renter has paid $240,000 with nothing to show for it. The homeowner has paid $300,000 but owns an asset worth potentially $400,000 to $500,000. But what about the down payment? What if you don't have 20% saved? This brings us to the biggest misconception about home buying in 2025. You don't need 20% down to buy a house. FHA loans require as little as 3.5% down. VA loans require 0 down for qualified veterans. Conventional loans can go as low as 3% down with proper credit and income. The key is understanding PMI, private mortgage insurance, and calculating whether the cost of PMI is worth it versus continuing to rent while saving for a larger down payment. In most cases, especially in appreciating markets, buying with a smaller down payment and paying PMI for a few years is financially superior to waiting and missing years of appreciation and equity building. But let's address the biggest fear that's paralyzing potential buyers right now. What if I buy now, and prices drop 20% next year? Here's the reality check. If you're buying a home to live in for 5 to 10 years, short-term price fluctuations are irrelevant. Real estate is a long-term investment, not a day trading vehicle. If you buy a house for $500,000 and it drops to $400,000 next year but recovers to $600,000 in 5 years, did you lose money or make money? You made money, built equity, enjoyed homeownership benefits, and probably saved money compared to renting for 5 years. The bigger risk isn't buying at the wrong time, it's never buying at all and spending decades paying someone else's mortgage while building zero wealth. Now here's the strategic framework for making the right decision in 2025. If you're planning to stay in the same area for at least 5 years, have stable income, and can afford the monthly payments comfortably, buying in 2025 makes sense in most markets. If you're unsure about your location, expect major income changes, or would be stretching financially to make payments, waiting might be prudent. But don't wait because of interest rate speculation or predictions about market crashes. Base your decision on your personal situation and long-term plans. Here's something crucial that most first-time buyers overlook: the hidden costs of homeownership. Property taxes, insurance, maintenance, and HOA fees can add hundreds of dollars to your monthly housing costs. Make sure you're budgeting for the total cost of ownership, not just the mortgage payment, but also consider the hidden benefits: mortgage interest deduction, property tax deduction, and the psychological benefits of ownership and stability. One more critical point about timing the market: the best time to buy real estate isn't when conditions are perfect. It's when you're financially ready and have found the right property at a fair price. Perfect market conditions rarely align with personal readiness. Successful homeowners buy when it makes sense for their lives and hold for the long term. Let's also talk about regional variations because the housing market isn't uniform across the country. Markets like San Francisco, Seattle, and New York might still be overvalued and due for corrections. Markets like Atlanta, Nashville, and Tampa might offer better value propositions. Research your specific market. Look at job growth, population trends, and inventory levels in your target area. National housing statistics don't determine local opportunities. For international buyers or people relocating, 2025 might offer unique opportunities as some sellers become more motivated and inventory increases in previously overheated markets. But remember, real estate is ultimately about location, location, location. A great house in a declining area is usually a poor investment. A modest house in a growing area with good schools and job opportunities is usually a solid choice. Let's recap the 5 key factors that make 2025 a potentially excellent year for home buying. 1. Inventory levels are normalizing, giving buyers more options and negotiating power. 2. Rate lock arbitrage allows you to capture today's prices with future refinancing opportunities. 3. Demographic trends support sustained housing demand regardless of short-term rate fluctuations. 4. Construction constraints provide a price floor even in cooling markets. 5. Real estate serves as an inflation hedge with fixed-rate financing. The decision to buy a house in 2025 shouldn't be based on trying to time the perfect market conditions. It should be based on your financial readiness, long-term plans, and finding the right property at a fair price. Interest rates will fluctuate. Markets will cycle through ups and downs. But homeownership remains one of the most reliable paths to building long-term wealth for middle-class families. The biggest mistake you can make isn't buying at the wrong time. It's paralysis by analysis that keeps you renting forever while waiting for perfect conditions that never come. If you're financially ready, have stable income, and plan to stay put for several years, don't let interest rate fears keep you from building equity and enjoying the benefits of homeownership. Start shopping, get pre-approved, and focus on finding the right property rather than timing the market perfectly. Your future self will thank you for taking action based on solid financial principles rather than market speculation and media hysteria. If this analysis has helped clarify the 2025 housing market for you, smash that like button and share this with anyone who's struggling with the buy versus wait decision. Subscribe to Financial Legion for more real estate insights that cut through the noise and focus on what actually matters for your financial future. In our next video, we're revealing the 5 biggest mortgage mistakes that can cost you tens of thousands of dollars, even with perfect credit and plenty of income. Until then, remember that real estate fortunes are made by those who buy when others are afraid and hold when others are selling. The question isn't whether the market is perfect. The question is whether you're ready.